I think, if you look at the full fiscal, right, for the last 3 financial years, we have outperformed the average of the top 3. And we feel completely confident that even in this fiscal, we'll outperform the average for the top 3. So given our order book, given our booking and pipeline, and given what we see in the market, we feel completely confident
which means, Anand, that you're leaving a lot of pressure on the next 3 quarters for you financial year, because your quarter 1, as in the numbers as well show, is I mean, with 3% revenue growth in rupee terms and bottom line slightly below par, there's a lot of delivery that people can expect in the next 3.
Absolutely. Actually, for us, H2 will be a strong quarter. I mean, a strong, for us, the H2 in there. As we speak, for example, we are transitioning and transforming close to 10 infrastructure engagements, right? They're in, again, different phases. So they will move into the mature phase in that period. Likewise, other, similar engagements. So we feel fairly confident that, the full year numbers will be delivered.
Anil, how has the quarter been? Because, when that sound of caution came from you guys, a lot of people were wondering that why is it that cross currency is not working in the favor of an IT company, because typically this quarter cross currency should have performed. How has that side of the picture been in this quarter?
So the cross currency had a headwind of 70 basis points. We were anticipating it to be a bit higher, but actually it turned out to be 70 basis points. If you look at other results which have got announced, the numbers are slightly higher than ours, because of this mainly coming from Australia and other multiple countries where which currencies went down against the US dollar, while the euro and GBP were relatively stable in this particular period.
Okay, so no problems on the currency front. Okay, rupee will probably continue to be a tailwind. What about the EBIT guidance? Not exactly a number guidance, but you broadly stated every time that you've spoken that you aim to keep it between this 20.5 to 21.5, 22.5 kind of a band. Does it stay that way, or do you think there could be pressure going ahead?
So you are absolutely right. I think our margin guidance range of 21 to 22% stays. We are confident we will be able to achieve that number. And this quarter is I would say, a step in that direction, where you see that the EBIT margins have gone up by 40 basis points.
It's a good positive surprise. I wasn't expecting this.
In spite of having taken that the salary increase which impact comes in this quarter. So we have been able to absorb that, which was 85 basis points. So I would say that we are on course to meet our 21 to 22% guidance range. So one thing I would like to just highlight here is that, in the beginning from January this year, we started our investment program. Our investment was basically primarily in 3 areas. One of the areas was setting up in global delivery centers, co-innovation labs, and research facilities, lab facilities. Second was in terms of adding more bandwidth in terms of digital, so hiring 70 plus senior leadership and risk and compliances area. So that was the second sort of a area of investment. So these area of investments have started paying results. So we are now getting the benefit of it, which is reflected in, as Anand said,
are the last portion of that investments done, Anand?
I think, from a base foundation, those investments are largely there. If you look at the beyond digital team that we have created, right? We've been saying that digital is part of each of our lines of business: engineering, infrastructure, application, and operations. But we needed a more cohesive end-to-end story and the value proposition for the market. So the beyond digital organization, the leadership is there. The 5 different service offerings we have in there. We've hired what we need from a foundation perspective. Of course, as the business grows, we will keep adding. But I think we are comfortable in the investments we have made in that space, and that they're paying off as well.
That's good. We'll talk about that as well. A couple of questions. This client-specific issue that has come out, is it strictly a one-off, or does it percolate into the other quarters? And to couple it up with a commentary on IMS at this quarter I was just looking at the stats. The last 9 quarters or 10 quarters or maybe more, the lowest IMS growth is 3.1% quarter on quarter. So this now by far will be the lowest that you've done. Would these things change, if not in quarter 2, quarter 3, quarter 4?
So let's first take the first one, right? So I think the project the program we're talking in reference, where we made that provision, it's a one-time event. And I think whatever we had to, we've cautiously provided for that, and whatever is the outcome based on our dialogue, we will see. But I think, that's a one-time event which has been completed. Coming to the infrastructure portion, like I said, there is a very strong booking. There is 10 engagements already in transition in different stages, and they will definitely kick in the second half of the fiscal for us. So we seem completely confident in there. IMS growth will lead the charts. If you look at a full fiscal perspective, including the industry, we are extremely confident on that. If you look at our booking as well this year, in this quarter, we booked, about 10 large transformational engagements, totaling to about $1 billion. Again, they are driven largely by ITO and infrastructure management services. So we feel very confident on the infrastructure management story.
Okay, before I get to the digital part of the business as well, you referred to it, just a couple of more questions. One is, unless I'm very wrong, you mentioned that there are delays in complex assignments in IMS. Now, what's the nature of this, if you can give some flavor as to why is this happening? Because this hasn't happened until the last fiscal at least, maybe a couple of quarters off and on, but otherwise not so much. So why is this happening? And two, the street believes, this is something that is a common thread, is that there is heightened competition in IMS now, which is leading to, while you guys are still the leaders, clear and far, there is, because of this competition, you have to compromise a bit here and a bit there. Are these correct assessments?
So let's take the first one in terms of the complexity and the time it takes to execute. So over the last fiscal, we announced about $5 billion of booking, right? Over the, across all our lines of business, a significant portion of that was infrastructure. Obviously, the nature and the size of engagements over there are a lot more complex. There are a lot more, the component of transformation in those engagements is much higher, and therefore the lead time to execute them is a little higher, right? So the programs we see in that bucket, from what used to average around anywhere between 6 to 8 months to complete the transformation phase have gone up to more like 12 to 15 months. So that has led to a significant portion of delay.
So are you saying that the payback period will be longer? So when
it
comes in, it comes in buckets.
The execution takes longer. I mean, let's say you take a G500 corporation which has, 15 or 16 global data centers. So not only are we looking at consolidating it, migrating it out from the incumbent, but also building a complete new technology stack built on a hybrid cloud architecture. So it does take a lot more time for executing some of these programs. Another point to see is if you really look at our steady state component. So if you look at IMS, they have two portions, the one-time services which are transformational in nature and the steady state portion which is the recurring portion. That for the last, by far 12 or 13 quarters has gone at a very heavy steady pace, and that continues to be very strong, which is one of the reasons when we look at the order book, the annuity stream is much higher over there. Now coming to the point on the competition has been similar. I mean, you have the large players, large global players, and you have the traditional Indian players. I think some of these large complex deals, given that there is still a significant portion of renewal deals, the competition really is incumbent versus, a new model of a next-gen way of doing outsourcing. So we still see that. The cases are still business case driven. I don't think we need to necessarily, it's not really a pricing issue. It is really about what is the value delivered from moving from one provider to another, which is what customers are looking at. It has not been any different. It has been there for the last 8-10 quarters, and we continue to see that same trend.
Okay. Just before I come to Anil on one more very important point, a word, Anant, on the order book intake, because is this an industry trend? Your peers, when they announced the results last week, they mentioned about how their order books are looking significantly higher than what they have been in the previous 12 or 13 or 14 odd quarters. The analyst community is believing that because of increased automation, so on and so forth, Indian IT order book sizes could face challenges. Clearly, your performances are not showing that. What has been your experience?
So I think it will reflect more on the headcount, and therefore, the difference really between who's doing automation or who's not doing automation will really come from two questions. What's the revenue per employee? So if you look at our revenue per employee, it's 58,400 annualized, right? It is amongst the highest in the industry. Automation is not something we started today. It's been there for a while. It started with MTAS about 5 or 6 years back, moved on into AuTOps, and now of course it's going into a new concept called dry ice, which we will talk a lot more about. But we believe that automation is an integral part of next-gen ITO, and it will be a differentiator. Customers are not really looking at what's the headcount you put, what's the pyramid that you have, what is the level, whether it's onshore or offshore. But when they look at a 5-year engagement, they assume that these will be baked into the benefits that they will get. So we continue to drive that, and that is reflective of the order booking that we do.
Now, Anant, while we talked about it in detail, it is pertinent to talk about it right now as well. What do such wins mean? Because aside of the fact that yes, while you're a global brand, this in a way gives you more visibility, because Manu is probably a much more well-known brand, so to say. So that is one. And two, because Manu or a few other companies and the kind of clients that they are working with, does it give you a bit of an inroad into some other large clients as well, in geographies and in verticals where you might not be present hitherto?
Well, absolutely. So I think the first is, it's in a series of co-innovation labs which we have created.
Yes, so 7th or 8th, right?
This is the 7th co-innovation lab, the first in the sporting and media arena. So what does this give us, right? I mean, of course, it's, iconic, and it's, one of the largest sporting club. I think the most important thing is the quantity of fans that this club has, right? 659 million followers, therefore implies that a very large population will be logging on into the various systems that they have. So it allows us to create the systems which are of internet scale, right, which are secure, of a very different nature. You have these 659 million followers coming in from 200 plus countries. How do you ensure security is that strong? And finally, of course, it gives a completely new way of building a differentiated user experience. Now, these three things, while it is relevant for Manchester United, it is also relevant for the 80 other sponsors that the Manchester United has. So whether it is large sporting brands or automotive companies or insurance firms, so I think there will be a more integrated way in which we can offer some of the capabilities, jointly offer the capabilities we build with Manchester United to some of those firms as well. I think, and then beyond that, if you really look, it creates two core engines for us: the user experience engine and the analytics engine, which can be applied not just in this industry, but then in other industries like financial services or insurance or consumer goods. So for us, it is like an opening of a completely new set of capability and experience that we can take somewhere else. So I think that's really the relevance of that specific engagement in there.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.